Good day, fellow investors. I got a lot of comments about, Sven, can you make an update on Intel, which is a company that we made a few videos over the last 2 years. A lot of things has changed, but I can make an update on Intel very easily. If you just check the curriculum on my research platform, it is in the link in the description below. You can see here that Intel is on free preview, as is Cisco and Berkshire. Update on earnings. This is what I do on my platform. Follow the risk and reward and adjust the investment thesis. So let's see Intel. So everything on my platform is on the top of the course curriculum, and everything below here is just for reference. So here you have Intel among others covered stocks. And let's see the 2-page summary that I make for every stock that I cover. So expect margins to drop, then remain flat for a few years. Expect single-digit growth for a while, and then if they hit their targets and the sector remains positive, acceleration by 2025-2026. And here are the question and exclamation marks. Will they hit that or not? That is also a risk questions. Now, these are not great business developments with heavy capital investments that could keep the pressure on the stock, as the market usually wants confirmation, not promises. The gross margin down to 46% and expected to stay around 52. They hope it will increase by the end of the year back to 52 from 56 that it was in the past, and then increase higher to normal levels according to guidance only in 2025. And the decline is expected further for a while, but return to normalcy in Q4 2022, the lower normal, of course. And revenue growth is forecasted to be just 1.7% for this year, with a margin drop, single-digit growth, and then acceleration to double digits after 2025, as the investments made in the coming period bear fruit. As I say here, Intel is cheap in the 40s, keeping in mind the long-term success of the story, incredibly cheap in the 30s, and likely impossibly cheap in the 20s, if they manage to turn the business trend around. If not, then the risks come from missing growth projections stated 12% growth in 2026. If it doesn't materialize, it will look ugly when the market loses faith in promises. So the risk is high, as there is execution but also competition risk. Also, there is a big difference between hitting the growth mark in 2026 or 2028, if they hit it at all, as the competition isn't staying still. Intel could be a China-Taiwan hedge with the CHIPS Act and everything. If there is mumbo-jumbo there, then Intel is the global counterparty for supply chips. There are investment scenarios. If all goes as planned, you can double your money by 2026, with the biggest part of the gain coming in 2024-2025, as the great growth plan Intel has gets traction. Then we have possible 20 billion of free cash flows, growing double digits, should lead to a valuation of 20 of free cash flows times 20, 400 billion market cap, which is a double or even more from these levels when I wrote this in March 2022. The risk is missing the set growth targets, having a lower than expected return on investment capital, could be due to competition or also economic trends. Hard to predict what the world will look like in 2026-2030. Now, the value investing strategy there, wait for it to be an absolute bargain where you can't lose and left is only the upside. And that is, let's say, market cap 150 billion. It is unlikely that will happen, and then with the last earnings it actually happened. Now we'll check the stock of Intel in a second. The normal investing strategy, Intel looks undervalued on a relative basis, giving the potential of 15% free cash flows in 5 years from current levels. That is then 15% on current levels, even more, 20 billion on 150 market cap. That's a double if that happens. I've made a valuation on $4, 36.5% payout dividend. Now, look at this. This was for 2022 guidance, and now earnings per share are guided to be half of that, which also makes the valuation useless. We have to see if they hit this back, but okay, there are good scenarios just to keep in mind, okay, what and why are we investing in? Growth case 4%, then 10%, best case 6%, and then 13% over the subsequent 5 years, first 5 years 2%, and then 7%. This is just an overview model, and you can see here that the intrinsic value goes to 47, 70, and 32 in the worst case scenario if there is really no growth. This is discount rate of 12.5%, so if you put it 10, this is even higher. But even for this, all in all, Intel is well priced for a 12.5 long-term return. The key question is, will they reach $5 in earnings per share in 2026 and then grow on that? If yes, the stock will double. If not, then it will be ugly. Will Intel go bust with 20 to 30 billion of operating cash flows, just 30 billion of debt, and 36 billion of cash and short-term investments? Operating in a sector with good demand growth, it's unlikely Intel will go bust, which makes it a value investment. Therefore, I would say the risk of total loss is very low. The risk of not satisfactory returns is there if the market or the competition or Intel execution doesn't work as planned. So, conclusion, from a risk-reward perspective, it's likely that Intel will deliver a double-digit investing return over time. Range of returns over the next 5 to 10 years is between 0 and 20% per year. Anything can happen, but these are the most likely developments. On Q2 2022, it seems the market doesn't want to hold, as good things might only start happening in 2025. That's a long period to hold something, therefore the market is dumping it. The good news should be out in 2024. Wait for that. Not interesting from a market perspective. From a value investing perspective, the market cap is 145 million. The equity, the investments, and the company will also likely make profits. It has a price earnings ratio of 15, which much more upside than downside. And even if they lower their revenue hugely, terribly, likely for a year, it still looks like value, especially in this perspective. The question is, when will the stock go up? There is not an answer now. Given the guidance and the numbers, in addition to the macro slowdown, there is not a clear catalyst ahead. On the other hand, Taiwan issues or something might help create a catalyst, but you never know when will that happen or not. So I have added it to the large research platform Covered Stocks Positions, where we add everything that is here on the covered stock. But this is, now you can read all the past analysis and the updates. There is also very much on Intel. Now, this presentation that I made approximately, I think, 2 years ago is really important because since then Intel completely changed. That was buybacks, earnings, dividends company, where they call the past CEO a bean counter. So bean by bean you create value over time, and that was very tempting at 50 for the very long term. Then they said that's not good, that's too boring for Wall Street, we need to follow those hype stocks, and now they have a growth stock completely focused on growth on everything, still paying a dividend, I think, okay, but focused on growth, and growth stocks got clobbered over the last year or 2 years, especially since Intel decided to make the change, and so is also Intel stock that got clobbered. So if we look over the last 2 years, so I think I made that video in September 2020, everything looked good there, so around 50 value, and then they started to do the transition to growth, and as ARK stocks and everything crashed since then. The Intel is now 50% down from the peak. The market cap is just 129 billion, which is approximately what they invested over the last 10 years into production and everything. And from this perspective, yes, it looks really, really cheap. But then again, we have to see how the world will evolve over time. The key problem here is that the market doesn't know when this will turn around, and therefore everyone is dumping it. I think I also sold it a while ago, especially with the profit earlier, depending on what portfolio, but now it's just in the covered demo portfolio because I'm also waiting. Everybody's waiting, so there are no buyers. Everybody's waiting for these catalysts to come in a few years. So that is Intel. Whether it is a buy or not depends on you. Whether you like owning Intel for the next few years, at what price you like owning. Are you buying it for the dividend that might also be cut if there are more bad news ahead, more needs for capital? Are you buying it for the infrastructure that they have built? Are you buying it for the position against competitors? If you can answer why are you buying Intel and compare to other things, Intel might be one of the best buys for you, depending also on the other buys that you have at the moment. It is really cheap at 129 billion. They are investing 20 billion per year, have been investing, thus you are just buying it at 50-60%. You are just buying it at what they have invested over the last years, which is at book value practically, and that is insane for a company like Intel. If the future is about chips and Intel makes them, at least some of them, it is likely that the return will be really good. When will the return come? Will it come this year or next year or in 2027, 8? That beats me. Nobody knows. But it looks cheap. The dividend is there. That is now Intel. Thanks for watching. I'll see you in the next video.